If you like the idea of investing in China, this interview is for you. Today I have with me a guest, Chi Keng, and we'll be discussing a few key points which I'd like to share with you right now. The first is, if you want to invest in Alibaba, should you buy 9988 in Hong Kong or BABA in US? The second is, we'll give you a quick update as to what are the biggest movements by institutional investors. The third is, we'll be discussing Tencent, which has sold away SEA Limited recently and has made plans to divest many of its Chinese stakes. Last but not least, we'll give you a full update on Ant Financial, which is an associate company now of Alibaba. And without further ado, let's roll in the intro video. Okay, hi guys, I have Chi Keng with me today. Chi Keng, great to see you.
Hey, great to see you again.
Today we have questions for you because you're the Chinese expert. You tabulate all the latest changes and stuff.
I wouldn't dare call myself a Chinese expert. I just spend a little bit more time on different equities there.
You know, for anyone who hasn't seen Chi Keng's channel before, Chi Keng is a big fan of Alibaba. And right now, my first question actually dwells to Alibaba directly, because many people have this concern. Should they buy Baba on New York, or should they buy it from Hong Kong, which is 9988? So I also understand that you own both, right? Maybe you can explain a bit better on what are your concerns, or what is there not to be concerned about?
I think to square some discussions away, right? There are two main concerns surrounding Chinese equities. So one is the VIE structure, the other one is the delisting concern. So regardless of, let's first address the delisting concern. Personally, I'm not that affected by this entire delisting thing. So I have around 1,400 shares in Hong Kong and around 80 shares in US. So personally, when I buy in big tranches, so like for example, a specific entry price point that I wish to enter, and it's in a particular amount, because in the Hong Kong exchange, every single denomination is at least 100 shares. So if you convert it to the current Singapore prices, it's around 2 point something 3K, give or take. So there's just one single counter specifically. But in the US, there's no minimum lot. So you can even buy 120 USD for one share of BABA. So personally, I have both because I'm not really concerned in terms of the delisting. A lot of people say, oh, what if your BABA shares in the US delist?
The possible risk of it.
When in an event of a real delisting, right? So when everything is stamp of approvals, Chairman Xi or China says that, okay, you all should come back. I believe that the entire stock price will crash, regardless of where you're listed, because both of them copy.
But would it save the inconvenience if we are in 9988? We assume that although they are fungible, we assume that there'll be less inconvenience.
The problem is, it's true that there definitely will be inconvenience. And I did my homework and I went to check with brokerage firms, right? I think there's a minimum transaction volume, and only up to a certain price, I think around 100 over K, then it's worth it for you to do the fungibility and the switch over. So in this case, for BABA shares, I buy really is just for as a metric to just dollar cost average, because I have a much smaller position size.
In terms you can get in smaller quantity.
So if I wish to dollar cost average in smaller quantums, I can't. So which is also why I still buy in the US exchange itself.
Agree. Oh, okay. Now I get it. So it's the sizing part lah. You rather run that risk than you put in too big an amount, then you exhaust.
Technically, it's not really a risk, because if let's say there's a delisting concern, right, I will presume that the entire share price will crash, and then people will probably sell out of their BABA shares. And if you still want to hold Alibaba, you can just sell out in the US exchange and then buy in the Hong Kong exchange. Like, you do it yourself. So, but barring the fact that, of course, you incur some transaction costs or transaction fees here and there.
Agree. Yeah. Because we know that Charlie Munger buys on the US, right? If I read correctly. He doesn't even buy the 9988 version. He buys straight on US. The second question leads to, big fishes wise, what are some of the latest moves?
Okay, I think there are a few people, like investing personalities. So in this case, I think two of the biggest China bulls in the entire investing space, I think Ray Dalio and Charlie Munger. So both of them have pretty sizable positions in Alibaba in the portfolio that they're managing. So let's talk about Charlie Munger first. He made the news. I think a lot of headlines said that, whoa, Charlie Munger doubled down again. I think he tripled down actually. So he started a position and then he doubled. And then this time around, he doubled the initial position that he started. So in this case, when you look at it, right, a lot of people were saying that, oh, he's senile, he doesn't know what he's doing, he's old already and stuff like that. But I think if you were to really monitor how Charlie Munger, Warren Buffett, all these classic value investors, right, To them, if $200 is interesting, I think $100 they'll be excited, because to them, they're just following a set of strategies and investing philosophy that they have. So in this case, him doubling down is really just part and parcel of his investing process. He determined a specific intrinsic value of a company. I don't know what that amount is, but in order for him to buy his first position, between the $220 to $270 range, that's his first position he started. We don't really know when he bought, but I would project or speculate that it's around the 220 to 230 range. That's the first time he entered. And before he entered a position, he needs a margin of safety. So you can agak-agak go and guess what's his intrinsic value of the company. So with that X dollar intrinsic value, if the price drops to 120, what are you supposed to do? You'll be even more excited because it becomes cheaper, right? So this is Charlie Munger's investing style. Then on top of that, on the flip side of the house, there are also people exiting the position. So I'm not too sure whether you guys know about this investing personality called Mohnish Prabrai. So he is also considering himself as a classic value investor.
Yes.
He's also close friends of Buffett and Charlie Munger. And he runs his own YouTube channel too. So he gives interviews and he goes to universities.
He cut his losses, right? Is it?
Yes. So I think he recently also went to another YouTube channel to discuss about this entire Alibaba saga thing on why he sold out. So his main reason, he said he has two reasons. Number one is for tax loss harvesting. So thankfully, I think Singapore doesn't have this capital taxes thing. So what he did was he sold out his Alibaba to tax loss harvest. And the second point is he found a greater business in his own opinion. He thinks that Tencent has a far superior business model than Alibaba. So essentially, he sold Alibaba and he bought Prosus, which is a holding company for Tencent, and they have their own investment portfolio. But I think throughout the discussion that he had with Everything Money, he did say that over time, he and his team, I believe he has a team of analysts that's helping him as well. They discovered and he preferred the business model there. So he sold, and because Tencent was also quite beaten down. Actually, the whole Chinese
they're all beaten down, correct.
Yeah, they're all beaten down.
I guess on the big picture, the risk is the same, which is regulatory risk, government risk, correct?
Right.
So whether you go A or B, technically the risk is still the same. Probably it's just a preference in business model.
I think on top of business model, in terms of valuation as well, because Alibaba is the face of Chinese equity, especially it has it has the biggest float market cap in the US exchange. Barring the fact that Tencent is over the counter. So Tencent might not be as liquid as Alibaba. So every time there's a crackdown or every time there's negative news, Alibaba will be the first to take the hit. So if you were to study the volatility of Alibaba stock particularly, usually when people go up, you'll go up by a bit. Then people go down, right, you'll go down by a lot. So they're stuck in a lose-lose situation kind of. Yeah, that's the interesting observation.
That ties into Tencent, which I think I'm curious about also. We saw news recently, they disposed SEA Limited. Yes. And they've been disposing JD.com through a share dividend. What do you know of Tencent that we should hear about?
Okay, I ran a very quick community poll and we got a verdict. A lot of, I think around 40 or 50% of them felt that it was forced by CCP. I believe now the ground sentiment is people feel like the government don't wish for Tencent to be such a huge conglomerate that holds so much power in so many industries. So I think specifically we talk about in-house and in mainland China and outside of mainland China. So I think in mainland China, the stance is clear. They want to create a much more fairer playing field. They don't want people to dominate a particular industry. Even if they want Tencent to continue putting in money to encourage innovation, right? They don't want them to, just because of Tencent's activity or because of Tencent's investment, all these different smaller companies have an edge. So in terms of tipping the scale, in terms of stepping onto Tencent's ecosystem and stuff like that, right? They don't want to. It's like once you have Tencent's approval, you will win the game. I think that's what they want to prevent. They want a much more equal playing field and want them to have real competition and real value proposition, rather than because Tencent is my backer or Tencent is my investor, that's why I will win the competition by default. So that's what they're worried about. And I think in the e-commerce pie specifically in China, it's quite clear. Alibaba and Tencent is fighting a proxy war. So whoever is against Alibaba, Tencent will support. So like you see, right? JD, Tencent support. Pinduoduo, Tencent also support. So in this case, it really becomes I think to the Chinese government, they'll be feeling like, this is just a masking of this rivalry between the two companies. So in this case, rather than trying to tell them to sell out and keep the cash on the balance sheet, right? I think I would have to give credit to the Tencent's management team and the executive team of giving out the share of JD.com share to the shareholders.
Maybe the size is too big. That's why selling out is more difficult. You're going to move the markets too much. So you give as dividend, right? Then it's just a corporate action.
Yeah, and also there are tax concerns and stuff like that as well. And
but why SEA Limited? I mean, the biggest query I always have is, why sell SEA Limited is the least that CCP is interested in, right?
So in terms of SEA Limited, right, the selling is only 10% of their stake. So they trimmed from 20% to 18% only. So it wasn't like JD where they give out everything to the shareholders as well. So they had two specific actions, if I'm not wrong. Number one, they sell out 10%, like trimming down the position. Number two, they converted the share class into less voting rights to give Forrest, which is the CEO of SEA, to have more say and rights in the company. So there are many speculations out there. Number one, I think because SEA Limited recently want to go fight into the India market. So as you know, the Indian market is quite nationalistic and they don't really like, I don't think India and China is in the best position. So apparently this trimming down, some of them speculate that, hey, it might be just to prime SEA Limited to go into India much more easily, because I think India as a country is quite nationalistic and they don't like Chinese interference, or they don't like any company that is sort of related to the CCP. So that's one. Number two is maybe because this trimming is really very small, they still have the ideology of trying to invest in startups, invest in unicorns, and try to 10x, 100x their capital. So in this case, the realizing of that small percentage, right, could just be getting more cash flow and to invest in something else as well.
But again, this could be the start of the snowball. Right? Then next month they announce 10% more they're selling. And then again, they're selling pressure.
Right. For SEA Limited specifically, they did say that there is a certain lockup period. If I'm not wrong, now 6 months or 9 months, they cannot be selling. So that's the thing. And I personally feel like CCP couldn't care less about overseas investment.
That leads to another company that I thought of that is also in payments, because SEA Limited, we're going to do digital banking this year. And financial is also in the payments part, and it's part of Alibaba. Anything that we should find out about Ant Financial or their IPO process? What is it looking like?
Okay, I think for the entire Ant development, right, it has a very long history. So I actually did create a simple slideshow. I would do the full-fledged thing on my channel. So if you guys are interested in getting the full-fledged information, you can come to my channel. But I'll be sharing screen quickly. So this is just a very simple timeline on what happened in Ant Financial. So firstly, I think in the earlier days, right, we still remember the Ant IPO got rug pulled, essentially in 13 November 2020. One of the, I think they claim it as one of the biggest IPO of history, where Ant was valued around $37 billion USD, and it was suspended. So the biggest problem of this suspension, if you were to really dig deep and to really understand from the government's point of view, of course, the media would like to tell you because Jack Ma got into the bad books of Chairman Xi and how CCP don't like him, right? I personally hold a very different view. Essentially speaking, if you give the government the benefit of doubt, the problem is really this idea of a dangerous accumulation of systemic financial risk. So to dumb it down, Ant is basically creating a very big problem for the entire financial system. Ant Financials essentially enrolled around 100 million customers in their first year when they create this 相互保, this health insurance thing. Yet at the same time, if you contrast to the US, right, Obamacare only enrolled around 8.3 million in 6 years. 8.3 million in 6 years, Ant Financials did it 100 million in 1 year. And then they still use like some of the technologies like blockchain for like medical claims, payments, records. So you can see the innovation and the rate of innovating, right, is insane and it's crazy. So to a point where I think the regulators can't even keep up. If we look at pure numbers specifically, in 2020 alone, right, Alipay is just 16 years old and it facilitated 17.6 trillion. Visa is 54 years old, it facilitated 11.3 trillion, and Master is 62 years old and it facilitated 6.3 trillion. So this is just to give you like just some rough sense into understanding how impactful and how important Ant Group is in the entire financial system of China. So next, if you were to look into the entire crackdown, it really happened in 9th April 2021, where it gave a record headline, breaking headline, 2.8 billion fine. And then the central bank essentially also asked Ant Group to restructure. And they told them to come up with a comprehensive and feasible restructuring plan. On 13 September 2021, they actually did announce a few things that they wish to do. So at least the Ant Group's perspective. So firstly, they'll be breaking up their app. So just to give you guys an understanding, I personally feel that Ant Group has three main parts. Number one is the credit scoring system. Number two is the facilitation of the transaction, which is Ant-Pay or Alipay. And then the last part is the credit facilities that they offer, which is the lending business. So these are the three parts that will be split up, and I'll be going through a little bit more in the next slide. The plan moving forward, very simply put, I think People Bank of China and the regulators also work together, right? They essentially gave the green light to the new credit scoring joint venture. So in this case, the Chinese government are not comfortable with Ant holding all this data, and not comfortable with Ant just trying to monopolize the entire data industry. So what they want to do, in a way, some people call it nationalizing, but honestly, the joint venture, Ant still has a stake in it, and of course with a few stake-backed firms. So in this entire new rendition, right, it's really just to create a more centralized idea on having the data being kept.
Sinda is from government, the one in the middle. Sinda to buy 20%.
It's a state-backed firm. It's a asset management, yes. So Sinda is rumored to do 20% of Ant's consumer credit system. Is it then we have speculations of an IPO again? The sad thing is, just recently, actually on 14th of January, Sinda actually withdrew their participation from Ant's consumer credit. So they actually cited a few problems, and the main problem is really prudent commercial consideration, and the negotiation actually fell through. It didn't happen. And there were some problems, maybe. I think also, given the current macro conditions and climate in China today, because of the current slowdown and because of Evergrande and some of the banks are leveraged, some form of another leverage to a certain extent, they are now adopting a much more prudent stance. They might need to keep more buffer. And in this case, having this injection into Ant Financials and trying to go into that Chongqing Financials group might be a little bit not as desirable in this current climate. So which is why I think just last Friday only, Sinda actually withdrew its partnership. So Ant Financials today is in a crossroad. Either they find a new state-backed firm, but the problem is finding a state-backed firm is easy. Getting the approval of the Chinese government is hard. Because it doesn't matter whether is it state-backed or not. At the end of the day, the regulators or the Chinese government has to give the green light. And in this case, actually, as you know previously, right, the PBOC already gave the green light. But then this happened and they had to restart the entire process again.
So without this, there's no chance of IPO, if I hear it.
IPO, to a lot of people, they feel like it's just to unlock some shareholders' value. In this case, to help boost up their valuation and to help boost up some of the balance sheet recognition. But to me personally, I don't really see a very huge tailwind for Ant Financials to even IPO. Just speculation, of course. I'm not too confident that they have settled everything internally. Some of the inherent problems, and I think China is also, they're a little bit busy and they have quite a few things on their plate. So it might not be the best time for them to push ahead.
Yeah, and tech valuations have came down a bit. We definitely won't get that 37 billion valuation. That's pretty sure. So whether they want the IPO again this year is another big question. But I was also hoping that it will be an indication that regulation side, it's more relaxed already. Okay, thank you for your sharing. I'll leave links below to your channel. Once that tutorial is up, I'm sure you have more new insights that are collected along the way. And we hope to hear more from you from there. Thank you for watching to here, and if you have found value, as always, smash on the like button. Personally, I believe Chinese equity is cheap, and therefore I've made moves to get into Chinese equities myself. If you haven't seen this video on how I'll be investing in Chinese equities, check it out because it really helps you in your journey. And as always, invest safe, and I'll see you in the next one. Take care and goodbye.